gold's doing what it's supposed to do. All of my physical gold, that I own in all the different places around the world and all its different forms, I couldn't be happier with it. It's wonderful. What's frustrating to people and what makes people, give up is one, well, silver, which is the most heavily manipulated asset in the world, little tiny market, right? But also the mining shares, which people buy because, like silver, they want to make money. They want to make some fiat off it. Now, I'll admit, I think the fundamental picture for silver and a relative valuation versus gold and the undervaluation then of gold, which makes silver look even more attractive, is a tremendous, let's call it fiat making opportunity, which is why I own it. You can look at the precious metal mining companies the same way. You're like, well, this is like a leverage. This is like some kind of call option or something on the gold price. But they have their own all of them have their own fundamental issues and need a rising price. And so if you're in this and you own precious metal, physical precious metal for the store of value, sound money, they're doing exactly what they should do. And these day-to-day fluctuations are really meaningless. But the problem is so many in our sector are also, and I myself included, trying to make some extra fiat at this so you can buy even more metal. But when the time comes and everybody wants their actual gold, as you mentioned, all the stuff that the U.S. has given away, and forward sold and leased out and everything else, when the time comes and everybody's scrambling for those ounces, there's going to be a rude awakening, and price is going to be revalued multiples higher. And we're stuck kind of waiting for that, but I'm sure confident that day is coming. Every person watching us that can take an ounce out of the system and stick it in their safe is doing their part in ending this. Because, the banks will continue to lever and continue to rehypothecate and continue to create futures contracts and forward contracts and all the other crap, all this, financialized stuff. They'll do it all the way up to the end. But it's only a bank run, a true bank run on physical metal that will break it. Now, it may come from other metals. I mean, I think we should all be watching copper. Goldman says above ground copper may be extinct by this fall. And if copper runs out of, we run out of physical copper or nickel or something like that, what's to stop relatively educated people from going, well, wait a second, if copper is like this, then maybe gold is too. So it might come from other markets, but it could also come from this de-dollarization or just simple recognition that the metal's not there to take delivery. And that's what we're waiting for. Just one last thing. You mentioned getting to this point. And I always like to bring this up because I don't know how many people really know the history of all this. The Americans that think the GLD, they call it, I want some gold. So they call up their stockbroker and their stockbroker says, we'll put you in this GLD. You don't own gold. You own maybe some short-term exposure to price. The Canadian banks will sell you a certificate for physical precious metal. And you'll walk out of there, hey, I own gold. No, you own a certificate, a piece of paper, that if you read the fine print says you can show up and in 90 days we'll get you some metal. Well, good luck with that. The U.S. doesn't like to buy things on the cheap. India, China, price goes down. They're buying. U.S. price goes down. Oh, I don't want any of that, man. I just want the momentum. I want whatever's going up. So what if, God forbid, I'm right about where this is all headed by later this year? The economy is in the tank here in the U.S. The Fed has to actually start cutting like you have to expect them to do. And price takes off and breaks out. They can't restrain it. And it breaks out above 2,100. And people start to buy. And people are all of a sudden wanting physical metal again. And all of a sudden there's momentum to the upside. Well, what are they going to do then? I mean, I know they'll just reset and they'll try to defend a certain level and get short and flush the specs and all that kind of stuff like they always have. But the point of all this is it doesn't matter. I mean, even under this system, price will go up, as you said, at least in terms of how many dollars it takes to buy an ounce of gold. I mean, you just go back to 2003, it was 300 and now it's, 2,000. So it's not like a lost cause where, it's never going to go up because the banks control it. What it is it's financial protection. In the meantime, it's still going up like it's supposed to go. What's abundant is the financialized derivative that's used to discover price. There's no restrictions on how many of those can be created. You and I have restrictions with position limits and margins and stuff like that. These big banks don't. And so with no restrictions, they can create as many as they want, as long as they can keep people from taking delivery and keep flushing them out so that they never have to make delivery. Then they can continue to play this game that we've watched now, for as long as we have. The very interesting thing will be, as we get now into the back half of this year and next, and price gets away from them, how will they respond? Will they play the same old games? That's why all this Basel III stuff that you discuss every week is so important. Will they be forced out of these games by some of these other central banks that are all accumulating metal and getting ready for the next global currency regime? All of these things combined should signal anyone listening to us to at least take some of your dollars or your pounds or your euros or whatever and get them out of your bank where you're holding them and convert them into precious metal. That's what these central banks are doing. They're taking their currency reserves and putting into gold. If they think it's a good idea, maybe you should think it's a good idea too. Think of it as if you're a banker trading for, you name the bank, JP Morgan or Citi or whatever, and you're managing price of silver, which of course they don't do, right? If you follow the commitment of traders reports, we saw this several times late last year where price of silver in particular came down to a certain level, and all the way down, the speculators were selling and getting short, and the banks were actually getting long. Now, why were they getting long? Because below $18 or so, the silver producers can't get it out of the ground. They stop digging it out. And so there's actually a wise banker going, maybe we ought to be long here because we've got all these other obligations, and maybe we can take delivery of some and feed it over here and all that. So there becomes, I don't like to use the term physical floor to the digital price. What it does though, is it does create a level from which price stops going down. And then the opposite that we've always railed against begins to happen, where the specs that are short start to get squeezed and flush the other way. And again, this happened 4 times in the fall of last year, where silver went down to 18 and then sprung higher. What has really transpired, and how this alchemy has taken place to convince the world that COMEX futures or forward contracts or unallocated metal in London or whatever, that's actual gold. We get people to realize that that's not actual gold, that there are maybe 100 people that think they own that same ounce. And whether that gets forced by a bank run or something to do with these BRIC nations, laying their hands on gold and revaluing it,